Traders, as promised, welcome to our new free video analysis for this week. Actually, it will be video for the end of the week ahead of the webinar that we will have on Monday. So if you want to be with us in our webinar each Monday at 15 Central European Time, and I will put the link below this video. So what's going on? As you know, Fed has finally made a decision. They cut rates not only by 25 basis points, but for 50 basis points. Okay, so they actually made a step further regarding cutting rates. And what's really interesting is that despite these cutting rates, we are not seeing dollar breaking to the downside. As you can see, market is actually sideways and US yields even slightly higher. So I think that these policy changes are very, very important because markets are always mostly driven based on expectations, based on what speculators think, and that's how they will position themselves in the markets. Will they short it? Will they buy it? Whatever. So, based on these cut expectations, well, that was the main driver for dollar weakness over the last few months. And that's why it's not a surprise that lower US yields have also sent US dollar to the downside in red here. But now when this decision by the Fed and Powell finally arrived, well, now we have to be aware that maybe this change in policy will also at some point have an impact on change the direction of the market. It doesn't mean that this will happen today, tomorrow, but if the cuts will keep coming in the next few months, then of course this at some point will have also maybe even the bearish impact on the stock market. Okay, and this could then potentially send the US dollar to the upside, especially if cuts will continue based on the recession risk. But we are not in that area just yet. However, what is really important at this stage is that, as I said, based on cuts expectations, US yields have been moving to the downside, US dollar also. But now when cuts were delivered, market is has stabilized, I mean the dollar. And this means that it can be some kind of a buy the rumor, sell the news impact, where based on the rumors, dollar has seen weakness, traders were shorting US dollar, and now when cuts arrived, dollar has stabilized. So I think that now maybe even some traders wanted and tried to short the US dollar after the 50 basis points after they decided to cut more than expected. Everyone thought, okay, dollar is a sell, and what happens? Well, market is already at some near-term extremes. Okay, and because this buy the rumor, sell the news impact, the market doesn't move to the downside, and we are actually seeing a stabilization now in Elliott Wave terms. Okay, this stabilization is also not a surprise. We were looking for a move to a new low here, down towards 99.50, 100 level. Maybe still another leg to the downside is possible, but I really think that there can be some stabilization. Maybe in October we will see some higher degree ABC rally. So as I look on this wave count and price chart here, I clearly can count 5 waves to the downside here. Okay, you have waves 1, wave 2, wave 3, wave 4, and wave 5. And notice what is happening down here. Despite prices moving to a new low, we are seeing bearish momentum decreasing. You can see some overlapping price activity here. Okay, so this usually occurs at the end of the trends where market or bears are not that strong anymore. It's the same thing in uptrends where bulls are losing the strength. So in my opinion, maybe in the next few weeks, in a week, maybe more through October, we will see some stabilization. As I said, 100 level is also a very important level. 99.50 is the fee projection for this whole 5 wave cycle. So if we are now moving into these late stages of this ending diagonal in the 5th wave, then we clearly should be aware of this ABC correction. So if you want to join the weakness, just be aware in this downtrend on the dollar, which I believe will still resume at some point. Just be aware that there can be some rallies through October, and possibly one or two could be the next ideal resistance. But as I said, maybe in the short term we will still retest another lows here just to make this ending diagonal even better. Also, as I look at on the euro dollar, we're still missing a push to a new high here, 1.12, maybe even slightly higher to complete the 5th wave up there as well. But you can see that we are moving into some very important levels. Also, what's important from today is that dollar yen is coming to the upside. Bank of Japan decided to be on hold with rates. Keep in mind that they been hiking rates and even intervened up here. And so far, market, as you can see, went pretty far to the downside from 160 to 140. So now Bank of Japan is satisfied with these levels, as we said already in our webinar. So they actually have more space, more time available before they make a new potential policy decision, maybe further hikes. Even inflation in August came slightly higher in Japan, and this is definitely something that they are watching and definitely don't want to hike even further if inflation is coming higher here. So in my opinion, it's very, very important to also to keep an eye on dollar yen, because if dollar yen is trying to show us that bottom is forming here, then of course this could have impact on the US yields, meaning that the US yields could see another push to the upside when dollar yen moves higher into wave B. So if this wave B is really going to take place here in the next few weeks, this will certainly keep rallying or in a corrective phase here on US yields as well, where we are also anticipating this wave 4. So after that bounce, after that rally, we will look for another and possibly final push to the downside on the US yields at the same time, when dollar yen could also drop into this third leg, at the same time when dollar index could maybe finally break towards this level right here. So after this current corrective phase that I'm expecting will unfold, I will be looking for another, maybe even final push to the downside here. So bottom line, Fed cut the rates, dollar has already moved, significant move to the downside. Keep an eye on potential rallies, which certainly can be the case when looking at the wave structure, when looking at the dollar yen, and when looking at the US yields. But after rallies, I think that we will have more weakness coming through. Traders, thank you for watching this video and hope that you will be with us on Monday in our webinar. Bye.